Good morning, everyone. We are doing pre-London Open analysis on 5th of September. September is officially here as a fresh week. We are not hanging on to August anymore, hopefully. So I just want to remind you about the news. And today we have bank holiday in USA, actually. I didn't know that. And in Canada. So we will be heavily relying on London session, although that's not to say that New York session will not have any momentum at all, because obviously London will be still open. Now we do have PMI news, FOMC, we've got a few different news this week, but every single week we get some type of news, so that is absolutely fine. Now let's get started and let's do the analysis in terms of what is going on here. So one thing that we are looking at is that daily weekly's here. So we are on weekly and we are on pretty clean charts. This is actually the chart that we went through last week, and we went through 16 years worth of data to kind of highlight the order flow and what is going on in the markets. So by highlighting that, we have noticed that here it's really hard to tell whether the order flow on weekly is actually efficient or not, but it looks like we did hit the premium. We just made it. It was a weekly mitigation too. And now what we can see is that we are breaking the structure to the downside again. Now, we did not actually get a break to the downside. What we can see more of is wicks on weekly, but of course on daily and 4H, it's a clean break to the downside. So from the weekly perspective, I would highlight this as my new premium and discount pricing. Now, we do not know when this will stop pushing to the downside. Therefore, I'm unable to really highlight it until it happens. Now, I would prefer to kind of solidify premium and discount when we get an actual body close on weekly. Okay, so actually, I don't think I will be able to solidify it until next week, because so far we have only wicks. So this is just something to pay attention to, but that is not a problem because we can highlight what is going on lower time frames. So let's scale down to daily. In terms of daily, we can see that we had the following happening. So let me just highlight, we've done weekly, so we'll see a lot of things highlighted. Now, the rule is that whatever is already mitigated, you delete your premium and discount. Okay, you can still leave your supply area, and you can still say, right, okay, there is a potential that there are orders there still. However, the orders are the strongest when the price leaves without actually coming back to mitigate. So for instance, here we have a supply, and we can see that that supply, and that was on weekly, that was highlighted on weekly. So we had a break of structure here, I believe, hold on, break of structure here to the downside. And what we can see is that after the break to the downside, the price did not return on a weekly to the premium pricing. And because it did not return to premium pricing, it left two areas filled with orders, one of which is here and another one is here. So those areas that are unmitigated and left with open orders, those are the areas that, granted, you will see some type of reaction there, or even price turning around for a period of time, especially when it is a higher time frame, because it is going to be stacked with orders and you will be able to find plenty of opportunities. Whereas when you have a mitigated area where the order flow on weekly specifically as well, I know we're on daily, but we are talking about what we have marked out in the last webinar, when you can see that price and the order flow actually mitigated and it's an efficient order flow, those areas that are still left with orders, they are less strong than the ones that are unmitigated. However, you may still see reaction to them, but the strength is a lot less. There is likely that to those areas, you may see actually a reaction rather than price turning around of it. However, I am just basing it around just weekly. Obviously, there are multiple of other things that we are going to build around it, like lower timeframes and the order flow, supply, demand, liquidity, imbalances, etc., etc., etc. So there are a lot of things to build the trading idea around, but obviously those are the things that we are paying attention to. So now in terms of daily, what we can see is that, you know, this is weekly. And now again, if you want as well to highlight to yourself certain variables on your charts, and you have, for example, an overlap of premium and discount pricing that is unmitigated, you can, for example, you know, kind of make it a different style. So you can make it darker, you can make it this, you can make it that, whatever you want to do, because that is going to highlight to you, or leave yourself a note that is going to highlight to you what already happened. Now, in terms of daily, what we can see that we had multiple things happening. Now, in all fairness, when I am looking at daily is the same as weekly, because obviously I need to see after here price returned back into a premium pricing. It was an efficient order flow on weekly, then price broke the structure to the downside. Now after that break, we can see I need to justify where did we get the break, and the actual break of this low happened with this candle. So I would say that this is the actual break, this is the leg. Of course, I can see that the price continued moving down for a period of time. I could potentially highlight all of this as an area, all of this, because this is where the pullback started to kind of happen, tried, never happened, blah, blah, blah. But now we are looking at the internal leg, and we're just looking at where did the leg close before well, where did the leg close on break of the structure, essentially. Now we can see now that we have premium pricing that's highlighted to us up here that has not been mitigated. Obviously, when we are looking at the whole leg, and if we said, well, this could be the actual full leg, then it is mitigated. Or actually, it isn't. You know, if we went down to this leg, or is it mitigated, or it is. Now, nevertheless, we do have open orders up here, okay? That is kind of my idea. If we are looking at the break, after the break, we are looking for the price to pull back or correct itself. It did not correct itself. It continued to move into the downside. So over here, for example, let's just see, because remember, we are on daily. This is how we can resolve the problem. Well, what was this pullback? This pullback was 38 pips. 38 pips. Is it a pullback that you can actually consider, or is just a continuation of the same leg? Okay, what was the pullback here? Well, the pullback here was actually 120 pips. So that you can consider a pullback. So what you could do then and say, well, actually the leg actually closed here. And as we can see, even though the price came back into the premium on the main leg, we can see that we do have price not actually closing all of the orders, not tapping into an actual area, because obviously the ideal situation is where we tap into premium or discounted pricing and a supply and demand, because then we've got an overlap and we've got where the orders are stacked up, price coming into a appropriate pricing as well, and then price can efficiently flow. That hasn't happened. We created some type of swing. So when the price does eventually return here, I will not be selling of this supply. I will be looking for the price to come back into the premium pricing here and here. Okay. Now, when we are looking at the current leg and what is happening in the markets, I'm just going to move this slightly. We can see, okay, where did we actually break? So we can see that we have this high and this low. This specific low here broke the structure. Okay, so this is the high and this is the low. So this is the low, and now this could arguably give us a high. So this is the high, swing high, and this is the low, a weak low, and what we are looking for is for the price to return to premium pricing and to give us an opportunity. Now we can see that, of course, our supplies align with our premium pricing as well. However, for instance, if I was looking now for a continuation, and we can see that here, price created a lot of liquidity, okay? Liquidity has been created, and as we can see, neither of those highs took each other out. So specifically this one that tapped into the 4H supply, it did not take the other one high out. Therefore, liquidity is still sitting here. Okay, we know there is liquidity sitting there. Now, the reason why we're highlighting that on higher time frame is because on, for example, 4H, it may look like a prominent area, whereas when we know from the higher time frame perspective, well, we've got still some way to go in terms of long term, and we can only expect here reaction, then of course that is going to help us to generate a better trading idea, whether that is getting into the trade, getting out of the trades, or having more long-term targets. Okay, so this is the reason why we highlight it. So in terms of daily, here we had efficient price action. Here we're starting to take those lows out, but I would say that the flow is inefficient unless we are going to grab liquidity from here to go up. However, how likely is that going to be? Where clearly on monthly, weekly, and daily so far, we can see that sellers, supply is in charge of the price action. So those are the things that we can see. We can see where the premium is. We can see that at the moment, the price is inefficient. It didn't even sweep any liquidity. But of course, it is a higher time frame. So before price regains its efficiency, if we were waiting for the price to then return back again to premium on the new leg and then start selling, obviously that would take us weeks even, and we are intraday traders, so we just are aware of what is going on, but we can still get involved in the price action. So let's go into 4H and understand what actually happened here. Now, we can definitely see that we had this break of structure to the downside, which is also daily. We can also definitely see that we had a break of this low, and this low is an important low because this low took this high out, where the order flow down here was responsible for the move to the upside. So this is where the break of structure happened, and this is where is our new leg. So this is the break of structure to the downside. Now, one thing as well as that, what we can see is that after that break, now this is the high, this is the low. Price did not return into premium pricing again. Okay, so price did not do that. Now we have the nearest area to our premium pricing. Okay, we also have our daily, supply too, which is also in premium pricing. However, it is also stacked with liquidity, and that hasn't been swept. And then we've got another area just above it with an actual premium. Now, this is where I would expect some kind of reaction. I would expect short-term reactions, and because it's daily and 4H, I can still generate strong trading ideas. But this is where perhaps I would be expecting for this liquidity to be eventually grabbed and taken. Now, this is an inefficient order flow. However, on the next leg, from this high to this low, we created a new high as a continuation, a new week low, and we can see that clearly on 4H, we did come back into a supply. We came back into the premium. We grabbed the orders that needed to be grabbed. And now we are breaking the week low. And of course, in order to see that solid confirmation that this low is being taken out, so I'm just going to move this because this is daily. In order for us to see that this is truly taken out, we want to close below. Okay, of course, in between we can be sell bias, etc., etc., but this is where we are confirming that the leg actually closed it. If that leg is going to be confirmed, this is going to be our high, and this is going to be our low. Because remember, we have 3 levels of structure. We have the swing high and swing low. Then we have the internal structure, and then we have the substructure as well. So we are establishing on every single level what is going on to give us that accuracy in the markets and in our entries as well. So this is actually where the swing high would happen to the swing low. Of course, when we look at everything substructurally, on a substructural level, we had price breaking the low, price coming into the premium, grabbing more orders from the supply and breaking the internal structure again. So now what I would be looking at is this as a high, this as a low, but I also understand that overall, this is my high. To be fair, I could even take this high and this would be somewhere my low. Ideally, what I would want is an overlap of premium. And then that would give me that extra confirmation of what is going on. But obviously, again, 15 minutes is going to help us to exactly establish what is going on. We can see that we did break the structure here to the downside on 4H, break of structure to the downside. And now we are breaking the structure on daily as well, potentially, as well as on 4H. And again, we are unable to establish this low until it is kind of fully established and said, right, look, this is what is happening in the market and this is what we are doing. So now we can see that we have a potential area. Now we are unable to pick a certain area on 4H is just this, okay? But inside here, inside of this supply zone, we are going to break it down on 15 minutes to, of course, fully understand what is going on in terms of the order flow. So let's do that before we dive into more detail. Now we are on 15 minutes and this could be one of our prominent areas. So we have a potential overlap of overall leg of 4H, not overall, internal leg and substructural leg as well, okay? Because overall is somewhere up here. So definitely what we can see and the drop that has happened is, first of all, the drop happened from unmitigated area as well on 15 minutes. And this is where I believe I entered on Friday. Price moved down, swept me, and then we had a really, really nice drop. Now, we can see that multiple areas have been taken out. All of this was a buildup of liquidity, and it was a liquidity trend line. And we can see that we have, of course, breaks of structure. So most of all, what we can see is that we had a change of character here. So that's one. And secondly, we also had breaks of structure. So I would say that my chalk is there. It took its own high. Yeah, it's not a clean chalk, but it is a change of character to the downside. Nevertheless, we also have breaks of structure, liquidity has been grabbed, price reacted to the only area in a discounted area on Friday where we had a demand, and it was in discounted area, creating us also a failed reaction as well. So this was the demand, the only demand that was sitting unmitigated, except for this part as well. But because the price action was efficient, and even though the price on that efficient leg did not pick up the orders from this demand, you can see 0 reactions. It was not important anymore. So here again, what we can see is that we have the high and we have the low. Now, you could say, well, for the low, I actually want for where the demand was taken out. But to be fair, this is enough to see what is going on. And we can see that we have, of course, in our premium, we've got a supply at the extreme on 15 minutes inside of our 4H. And we also have this wick there. And that wick on lower time frame is going to be a failed reaction. And that failed reaction, if you notice, came from here, because this was the demand on lower time frames, picking up more orders from this demand, breaking the structure to the upside, picking up more orders, going to the upside, breaking those highs. Therefore, here we had equal lows and we had a demand that the price was respecting that had given us a failed reaction. And now that failed reaction on lower time frames is sitting in our premium pricing as well. And on 1 minute, we will be able to suss it out even more. But because this is how I want to take it into consideration. This is how I would highlight it to myself back in premium pricing. So this is where the price it was inefficient, and this is where we have orders left. So again, those orders are quite important orders. Now I would delete this 4H for myself, because I now have identified inside my 4H the 2 areas that I'm really strongly considering. Then we can see that the price took these lows out again. Now again, on 15 minutes, to me, if the price trades below a certain level, to me, that's a break. I don't care if it's a wick, if it's a body close, it's a break. Price trades below a certain level, it's a break to me. So we can see that break, and again, we'll repeat that process, and we can see that price grabbed orders, and we've got an efficient order flow. Then price continued moving down. This is the low that we are looking for the price to take out now, and we can see that here is where we would look for the price to pull back to, and we can see that price created inefficient order flow. Now, one thing I'm seeing here is liquidity. Okay, so liquidity sitting right below our supply in premium. So even though this is a supply that broke the structure to the downside in terms of its own internal low, so we also had a break here, okay? And whether you take this whole leg or whether you take this leg, the premium is still the same and it's unmitigated. But because that unmitigated premium is built on inefficiency, I am not putting too much importance on it, because yes, it regained its efficiency here, so we can go with the order flow, absolutely. But when the price eventually will turn around to correct itself back to the supply, I'm not paying too much attention to this. We may see some reaction, but I'm not going to create my main trading idea from it because of everything being mitigated here. This creating liquidity, we have 0 sweeps. We have recreated an order flow. However, it's not efficient. If you regained its efficiency here, fantastic, but it hasn't. Yes, the orders might be still open, but because of all of the liquidity and everything that is going on here, I would not really generate my first trading idea of it. I would kind of leave it to it, you know. Then we have price breaking these lows with this. So again, what I would do, this is the pullback that actually happened, and then this is the high, this is the low, and we can see that we have regained the efficient order flow from this moment here. Therefore I can delete it. We picked up more orders, and then now we can see that we broke the internal structure again, and we can see that from this high to this low, we are coming back into the premium, and of course we have our supply here that is sitting, and I can see that we potentially have some unmitigated areas here as well. I can see that we have liquidity here. None of those wicks are covering each other or sweeping each other, so it could be that the price is going to come back there too. Now I'm going to go into more detail in just a minute in terms of daily open, Asia session highs, low, etc., etc. But one thing that I want to highlight to you is that you can see that the flow is slowing down, and you can see that, you know, the price is moving in a downwards direction, and we have a little bit of a slowdown. However, we know that sometimes that slowdown doesn't mean too much, because that slowdown is to potentially induce reversal traders and say, look, we are slowing down, we are potentially you know, reversing now. It's used for inducement, and it's used for all of those purposes to create more liquidity essentially in the market, to then be able to fulfill their orders and they move. So now looking at what I'm seeing here, those are my 2 most prominent areas. I'm going to break them down further on 1 minute. I can see that this is where we could see a reaction, but this is where I'm going to kind of be careful with creating my trading idea. And this is exactly where, and I'm going to do a video for social media today as well, is I released, you know, entry models, like 4 different kind of drawings of different types of entry models. Now, it's not just that you have an entry model, you see it happening in the markets and you execute. Absolutely not. You have to take into consideration different scenarios in the market. Therefore, a scenario like this, where I know there is a danger, you know, it's a strong area because it's a failed reaction as well, and it's unmitigated. Price did not come back into premium. In technical terms, that order stacked up there. But because it was built on inefficient price action, if this price action was efficient, and then it left inefficiency in between efficient order flow, then if price came back there, I'd be like, this is the only area where we did not fill orders. I'm very confident to go and sell from it because I'm able to refine exactly what is going on. But because it's built on inefficient order flow, as well as there is liquidity there, this is where I have to be more conservative in this area at this price with my selling orders. And this is where I would potentially wait for the 1 minute order flow to develop off this supply and then join. Whereas if price comes back into the areas that I've highlighted, that we have overlapping premium, that we have areas where the price can come back to, this is where I could be more aggressive with my entry models and just wait for a change of character and sell. That's it. So this is where we have to establish a different scenario, and we have to establish the strength of the area we are planning to sell from. And once we do that, we are able to then obviously generate a very solid trading idea of it. So now, this is what's happening in terms of lower timeframes. Now, before I go into 1 minute, breaking things down, I want to highlight quite important things, and this is the way we trade in our coaching group. So we want to understand where is our daily open, and this daily open is also a weekly open because it's Monday. So this is where we open during Asia's session, and this is where the price is. Now, another thing that is important to us is to understand where was the previous day's highest price point, and this is not just to say, oh, this is previous candles high or low. This is the price at what Euro USD was trading at, and it's important information for you to attain. So we have this high here from Friday, and obviously that's the high we need to take into consideration because that is the last previous day. So this is the daily high, and that daily high, as we can see, also aligns with our premium pricing and with one of our supply areas that we want to sell from. So our confluences are now building, and we are more kind of looking into adding everything up and understanding what is going on. And also because it was previous day's high, a half of me expects for it to be swept. And because it's previous days highs or lows, or sessions from the same day, even not just from previous days, but from the same day, like a London low, London high, and where we see the sessions high and lows, this is where I expect sometimes for the price to be swept. And once it's swept and then starts building order flow off from that sweep, this is where I have more confidence, right? We are going to drop from this, or we are going to start building a bullish price action where buyers or sellers are taking control. So we have that. Another thing that we understand is that we had Friday's low, and we can see that at the open of the Asia session, we took that low immediately. We opened here and we immediately, without any pullbacks to the upside, without any corrections, we just dropping down. And I can even see that the price gapped in a market and we just went straight down. So already we are trading below not only Friday's low, but also 1, 2, 3, 4, 5, 6, 7, 8 from 8 days ago. So from 2 weeks ago, from 23rd of August low, we've taken it out. Okay, so it is telling that currently USD is definitely taking control and Euro is going to suffer. Another thing, lastly, that is important for us to acknowledge and understand is, of course, the weekly high, which is way up there. And it is there is some way between high and the low of the week's high and Friday's high. And then we can see again, which is again a strong indicator to us how weak Euro potentially is going to become this week. We are already trading below weekly low. Usually when we get a start of the week, we are opening the price and we are within the range of the previous week's high and low. That is usually what happens. And then based on the analysis, we are able to establish whether the price is heading for the weekly highs or the lows. And then we are able to kind of, all right, okay, this is what's going on. We are not even in the range. We already took those lows out. So it's just showing that euro is really going to struggle potentially. Okay. Now, one thing that I want to highlight as well is our Asia session highs and lows. Now we have our Asia session highs here. So this is Asia's high and this is our Asia's low. So at the moment, we are trading below the Asia session low, and we can see that we have created Asia session high at the today's open. It opened, then Asia session started here. Okay, so again, here is inefficient price action because look, we broke, we did not come back. Again, it's filled with liquidity in my eyes. Of course, the order flow from here may continue, and that's fantastic. However, when price finally gets up here, I'm not expecting for any of it to kind of hold. Of course, if we just sweep liquidity from here, and then that sweep is going to shoot, take this highest price point here, and then we will start creating new order flow to the downside. Fair enough, we can start selling from there, but we just have to be wary that it's also Asia's session high, and this is where we may struggle with actually going anywhere. You can see that liquidity build up, so eventually when the price will pop, it will potentially grab all of this liquidity as well. Well, let's observe and wait. Now, I want to highlight a few more things. Now, 2nd of September was Friday, and we have our New York session highs. So this is New York high from Friday, and obviously it's strongly protected. This is where the price dropped, and this New York high was created after non-farm payroll as well. We can see that any London lows have been taken out. We created a London low round here, not here, that was our London low, and that London low crumbled and we took it out. So this was a London session low. And also, where is the New York low? So this was a London session low, London low. London highs were around here, but then we took them out with New York highs. And then New York lows are, where was the lowest price? It was actually somewhere around here. Yeah, this is where we closed our New York session low. But we can see that after the open of the Asia session, we just went straight down. So those are the things to highlight, of course, and for us to understand. Now, unarguably, we are so biased, monthly, weekly, daily, 4H, 15 minutes is heading down. Supply is in charge of the price action, and what we should generate is nothing but selling ideas. And we know that the price potentially through the whole of today will be creating those liquidity zones. And those liquidity zones are created for reversal traders and are to create more liquidity on liquidity on liquidity in order to, induce traders. And then when they want to fill their big orders, boom, this is what's going to happen. So now I want to see exactly what the price is reacting to, why, how, and what is going on. Okay, so let's take a look at 1 minute legs so we can break down what is going on. Now, of course, we could go all the way up here, but we are going to do just the latest price action, and the rest you can do yourself to prepare yourself in case the price is going to come back into your areas. Of course, as always, any changes noted on the charts, I will be sending to Discord straight away, and we will be all on the same page. So granted that we are going to do that.